All right, let's get right into it. We're going to talk about something that's, well, it's a total game changer for any serious trader. We're talking about mastering the art of the low-risk entry.
And hey, welcome to AI Explains ICT. In this video, we're breaking down the absolute core concepts on low-risk entries, straight from ICT's core content, Month 2, Episode 2.
So let's just get to the heart of it, right? I mean, how can you, yes, you, dramatically lower your risk, but without giving up on those big, juicy rewards? It sounds impossible, but stick with me, because today we are going to solve that exact puzzle.
Okay, here's how we're going to do it. Think of it like a funnel. We'll start big, find our main anchor point, and then we're going to drill down from the hourly to the 15-minute and all the way to a pinpoint 5-minute entry. You'll see just how powerful this refinement is.
All right, first things first. Every single great trade idea, it all starts with the big picture. You have to see the market from that institutional point of view.
So why bother starting way up on these high time frames? Simple. It's where the big money plays. When you're looking at daily or weekly charts, you're aligning yourself with that massive institutional order flow. It gives you a really clear sense of direction, your bias, and maybe just as important, it cuts through all that chaotic noise you see on the smaller charts.
Okay, so once we've got that big picture bias, it's time for step 2, finding our anchor. This is that one specific, super high probability level that the whole trade is going to hinge on. And for us, that anchor is usually a classic ICT concept, the order block, specifically a bullish order block. You know, you can almost think of it like a footprint, a giant footprint left in the sand by institutions. It's that very last down candle right before a huge explosive move up. It screams, hey, the big banks bought here, and it's where we expect them to step in and defend that price again.
Okay, so let's put it into practice. Take a look at this daily chart of the Aussie dollar. See that level there? 0.7512? That's our bullish order block. That single level, that's our anchor. The entire trade idea is going to be built right around this spot.
Anchor is set. Now the fun begins. We start drilling down, and our first stop in the funnel is the hourly chart. This is where we'll get our first glimpse of a possible entry. So, as price drifts down towards that big daily level we found, a pretty standard logical trade would be to just buy this local hourly order block right here at 0.7542. And look, it's not a bad entry. It's perfectly valid. But let's talk about the risk involved.
To trade that setup safely, you're looking at a 20 pip stop loss. Okay? Burn that number into your brain. 20 pips. That's our starting point. But trust me, we can do a whole lot better than that.
Oh yeah, we can definitely do better. Let's go to the next level of our funnel. We're going to sharpen our focus now and zoom in to the 15-minute chart. This is where we get way closer to the real action. Now look what happens when we drop down to the 15-minute. See this? Instead of jumping in at that higher hourly level, we exercise a little patience. We wait and let price trade deeper, right down into our daily anchor level. And because we waited, we can now refine our entry to around 0.7520. That is so much closer to where the real institutional buying is.
So what did that little bit of patience get us? Well, we just slashed our stop loss down to 17 pips. That's a good improvement for sure, but we're not done yet, not even close.
Okay, this is it. This is where the real magic happens. For absolute maximum precision, we're taking that final step down the funnel for a truly surgical entry on the 5-minute chart.
And there it is. Look at that. Right on the 5-minute chart, price just kisses our big daily level, and this tiny little down candle forms right before it takes off. That is our signal. That's the one. It lets us get in with an incredibly precise entry at 0.7515, and we can tuck our stop loss right below the low at 0.7507. So tight.
So what's the bottom line? What's the final number? Our risk is now just 8 pips. I mean, let that sink in for a second. We started with a standard, perfectly reasonable 20 pip risk, and we cut it all the way down to a tiny 8 pips just by being patient and following this refinement process.
So, was all that work worth it? All that zooming in and waiting? Let's take a look at the incredible payoff you get from harnessing this power of refinement.
I mean, this table just says it all, doesn't it?
We started with 20 pips of risk on the hourly chart. We got it down to 17 on the 15-minute, and then boom, a surgical 8-pip risk on the 5-minute. That is a 60% reduction in your risk. That's huge!
And here's the real genius of this whole method. With an 8-pip risk, price only has to move 24 pips for you to hit a fantastic 3-to-1 reward on your risk. But get this. This is the craziest part. You hit that 3-to-1 target before price even gets back to the original entry from the hourly chart. Think about that. You could be taking profits off the table while the hourly trader is literally just hitting the buy button.
So let's just recap this low-risk entry funnel so you can start using it. It's 4 simple steps. 1. Find that key institutional level on a high time frame. 2. Be patient. You have to wait for price to come to you, to that level. 3. Refine your entry on a lower time frame. The 15-minute or the 5-minute is perfect. And 4. Execute the trade with a tiny, super efficient stop loss.
Look, if this video gave you one of those aha moments, could you do us a massive favor and just smash that like button? It seriously helps the channel, it tells the powers that be that this is good stuff, and it helps us reach way more traders just like you.
And hey, if you want to keep sharpening your edge with more of these deep dives into ICT concepts, you really got to subscribe to the channel. We've got a lot more coming, and you don't want to miss it.
Now, I know a method like this can bring up some questions, so if you have anything at all about this process, drop them in the comment section below. We promise a real person reads every single one, and we will get back to you with an answer. All right, that's it for this one. Thanks so much for hanging out with us. Now go see if you can spot this in the charts. And as always, safe trading.